Good afternoon, everybody, and welcome to this Mail and Guardian webinar called Debt Management Amid COVID-19 and Beyond. So I am Neil Roots, and I am the CEO of Debt Rescue. And I am joined today by Annelien van der Poel and Pascal Sinclair. So Annelien is the Chief Operating Officer at Debt Rescue, and she is involved with the day-to-day running of the company. And Pascal is the Chief Relations Officer at Debt Rescue, and he is involved with innovations, systems, and also relationship management at the company. So today we are going to talk about how to take control of your finances in these difficult times that we are experiencing. But rest assured, there is light at the end of the tunnel. So during the course of this webinar, you will be able to ask questions, and you can do that by going to the bottom of your screen and using the chat box. We will then answer and try and answer most of your questions during the second half of this webinar. We are also running a poll today. So if you go to the right-hand side of your screen, you will see an icon called the polls. And if you click on that, you can participate in this poll. And we would really like you to do that because it would be quite interesting to see the outcome. So the question of this poll that we're running is that, have your finances been negatively affected by COVID-19 or the lockdown? I think the reason for this is also for us to see how many people have been affected by this, and are we alone in this whole situation, in this pandemic? Because these are very, very difficult times, that is true. We ran a survey quite recently, and the survey found that 85% of people have been financially or emotionally affected by this COVID-19 pandemic. So that is quite worrying. And then what we also asked people in this survey is whether they took out payment holidays and made use of the payment holidays that banks are offering during this time. And only 26% of people said that they have taken up these payment holidays. Now, the worrying part about that is the next question that we asked them, and that was how many people would be able to go back to repaying their debt as usual after this payment holidays run out. So only 11% of the people said that they would be able to pay their loans back after the payment holidays ran out, and that's really worrying. Then 45% of the participants in the survey said that they have been affected by retrenchment or salary cuts or temporary layoffs. And that's very worrying, especially in light of the fact that we're really going to see some extra pressure on us in the coming months. And that is in the form of the petrol prices that started to go up now. And the problem with petrol prices going up is that it's not only affecting people directly when they put gas in their vehicles, but it also filters through to the prices of other goods and services. So that's worrying in itself. Then with regards to the interest rates in South Africa, we're very lucky that it's been the lowest. It's not currently the lowest that it's been in years. But the sad part is I think we've reached the bottom now. So from this point onward, we're probably going to see a lot of increases in the interest rates. And this obviously also filters through to a lot of costs, like your credit, obviously, your home loans, your vehicle finance, and all other credit. The other problem that we're going to face is, and that people are already facing, is the fact that these payment holidays that the people got from the banks. This is now starting to run out. So people must now be able to, and they must repay their debt and their credit. And not everybody is in a position to do that. And on top of that, what we're seeing now is that the credit providers have now started to actually collect on their debt. We've seen that during this lockdown that we experienced, credit providers did not really collect on their debt. But at the end of the day, and we have to face reality, these are businesses and they have to make money for their shareholders, and they will start to collect their money at some point, and we have seen that starting. So yes, these are definitely difficult times that we're facing, but like I said, there is light at the end of the tunnel, and we will discuss that as we go through this webinar. So just a little bit more about Debt Rescue. Debt Rescue was founded in 2008, and it's one of the largest debt counseling companies in South Africa. It's managed to help thousands of people to pay off their debt in an affordable manner without losing their assets. And we also, Debt Rescue provides all the available remedies that's available to people in South Africa to manage their debt and to pay off their debt. But Debt Rescue focuses on debt counseling. Now, debt counseling is a process that was introduced by the National Credit Act in 2007. The National Credit Act is the best piece of legislation of its kind in the world. In fact, South Africa is the only country in the world where you can place your home loan under debt review. So there's really help out there. Now, the reason why debt counseling is so relevant during these times is because of the fact that the whole process has been streamlined over the past 13 years, and it allows you to pay lower installments towards your credit providers, and you are protected against your credit providers. So how does debt counseling work? Just in short, what we do as debt counselors is we determine what the client or your income is and what your expenses are. And with regards to your expenses, we distinguish between your living expenses on the one hand. Now, your living expenses are things like your rent or your water, electricity, your groceries, school fees, all these normal stuff that you have to pay to live, basically. And then on the other hand is your credit installments. Credit installments is payments towards your credit card, your home loan, your vehicle finance, your personal loans, and these kind of things. So in terms of the National Credit Act, we are then allowed as debt counselors to reduce your monthly payments towards your credit providers to such an extent that you would be able to afford to pay off your credit providers in an affordable manner, and then you would also be able to have enough money left at the end of the month to pay for all your living expenses. What adds to that is the fact that we take this new repayment plan and make that an order of court, therefore giving you the protection that you need to make sure that you go throughout the process and finish this process of paying off your debt. So what we're going to do today and in discussing our topic is we're going to discuss the different elements to our topic by answering questions that we're getting on a regular basis at Debt Rescue. So we're going to start off with Annelien. So Annelien, how do I take control of the current financial distress and improve my credit health?
Well, unfortunately, it goes back to that one thing that most of us hate doing, and it's a terrible word, but it's budgeting. We need to understand our own personal finances before we can start making changes. And the only way to do that is through a budget. So what we need to do basically is go and assess what is our current situation in terms of income, whether it be whether we've had impact through Corona or not. We need to go and see what has my income been affected, yes or no. And then the next thing is to go and look at my living expenses. Now, living expenses, I'm not talking about debt. I'm talking about the things that I've got to pay every month to, as part of my life. So this would be my food, my rent, my petrol, etc. And see if there's any opportunities there where I could potentially be reducing some things, cutting some things out that I no longer need, making some lifestyle adjustments if necessary, and then seeing what I have left, and then comparing that to what my minimum installments are that's required in terms of my debt, and comparing them and seeing if I can afford what I have, and if the changes that I've made has an impact on to afford that debt. But unfortunately, it's all about the budget. We need to know where we stand.
Yeah, that's very true. Eh? And Pascal, so many people had to take salary cuts during this COVID time and this pandemic, and some have even lost their jobs. So as a result of this, they have fallen behind on their payments towards their credit providers. So is there hope for these people?
Thank you, Neil. And yes, it's certainly been a tough time out there for consumers, but there is hope. There are a number of remedies available to consumers out there, and one of them, which is debt counseling. If you think about it, debt counseling has been around since 2007, and is probably one of the best pieces of legislation. I think what also helps from a debt counseling perspective is the fact that there is a payment distribution agency. And through this payment distribution agency at Debt Rescue, we pay over millions towards credit providers on a monthly basis. And what we have seen that despite these tough, trying times, Debt Rescue's customers, more than 80% of our customers are still making their monthly payments towards their creditors. So in terms of hope, there is certainly hope, and we can just but say to the customers, go out there, understand what debt counseling is, because it has become one of the best collections tools for the credit providers, to which we actually just did a survey in the last 2 to 3 weeks asking this exact question. And they have come out acknowledging the fact that debt counseling is certainly now one of the best collections tools from a credit provider perspective. Yes.
Thanks, Pascal. That's very insightful. So, and Annelien, so we spoke about the different debt relief measures in South Africa. So, what are the available debt relief measures in South Africa?
So over and above, obviously, debt counseling, we also have two other main ones. The first one being administration, and then the second being sequestration. Now, administration is applicable for a small debt, and it's usually a singular account where you are struggling to repay that specific account for whatever reason. And you would apply for what they call an administration order through an attorney or an administration specialist. And the amount has to be below 50,000 Rand, and then you apply to have that account that you paid off over an extended period of time. The frustration with something like that is obviously the monetary limitation. It can only be a maximum of 50,000 Rand. It's only one account that you're dealing with. There's fees involved, obviously, and due to the way in which it usually does get restructured, more often than not, you are barely covering the interest. So the repayment terms on these can be extremely long for something as simple as a store card or a credit card, for example. The second one is then being sequestration. Now, sequestration is a process where you surrender your estate to a curator. And what that requires then is, as part of the process, is that you would then also lose your assets. So you will lose your home and your vehicle. You will surrender them as part of the process to lessen your debt burden at the end of the day. Now, It sounds quite severe, but there is an application for that. And this is usually specifically applicable to consumers who've had a dramatic change in their income stream. So you might see this, for example, with somebody who is self-employed and the business is facing severe financial distress, and the consumer can no longer afford to put forward any sustainable form of debt repayment, that they would rather then look towards sequestration as an option to find relief from their debt burden.
Thanks, Annelien. And one other measure that we've heard of a lot, that's not really a debt relief measure, but we've all heard about debt consolidation. So, Pascal, what is debt consolidation and what are the advantages and disadvantages of debt consolidation?
You know, Neil, debt consolidation is normally misunderstood. I think the easiest way to explain consolidation, simply put, it's a loan to pay off your loans. I'll touch on a couple of the advantages on debt consolidation. One will be it's one monthly payment that you make over to your credit providers. And the second one is that your monthly installments are less than what they were previously. With that said, there are, however, some that sits on the other side of the scale. And a couple of those disadvantages around debt consolidation is first and foremost the fact that the interest rates are exceptionally higher than what your current interest rates are on your existing loans or credit agreements. Secondly, and very important to note here, is the fact that there is no legal protection. So unlike debt counseling, which is regulated and we actually can protect your assets, there is no protection from a legal perspective as far as the consolidation loan is concerned. Thirdly, these loans are typically capped, so sometimes ranging anything between 250 up to 300,000 Rand. So with that said, your assets could not necessarily form part of this if you have a home loan, for example. Speaking of home loans, sometimes security is required to do a consolidation loan in the form of an asset. And typically what some of the banks do is ensure that through a home loan, they do debt consolidation and then essentially give you these loans linked to your property. So, Neil, as there's a good old saying, you can't borrow your way out of debt. And that's the difference pretty much between some of the pros and the cons of a consolidation loan.
Yes, Pascal, that's very true. And what you said about not being able to borrow your way out of debt, and people must really take note of this and realize that, once you are in that debt trap and you start to borrow money to pay off other debt, then immediately you can know that you're in that situation where you're not going to get out of, and that's the time to call for help, obviously. So, Annelien, many people have lost their jobs during this time, and just getting back to debt counseling, will debt counseling be able to help these people?
Absolutely. So to apply for debt counseling, you must be able to prove that you can commit an amount to repay your debt monthly. So therefore, there has to be an income of some sort, and this includes financial support. So say, for example, you have a family member who is able to stand by you during this time and on a permanent basis, and they can confirm that they'll be able to do that. That is an option as well. And you also have the case of a joint income household. So where both spouses are working and then one of them loses their income. You can then take that spouse that's obviously remaining, you make the necessary adjustments to your living expenses and to your budget. And then from that singular income is definitely then able to support the household as well as the debt. So as long as there is a form of income or support that they can get through this, then debt counseling is still an option.
Okay, that's very good to know. So it is available almost to everybody as long as you have some form of income, even if that form of income is money given to you on a monthly basis by a family member, for instance. So that's good to know. And the cost involved with debt counseling. Pascal, can you just tell us about the cost involved, and also some people might ask, but what if I cannot afford debt counseling, seeing that there is cost involved with debt counseling? So just give us an idea of the cost involved, and specifically talk to the people who is worried about the fact that they might not have enough money to go under debt review.
Sure, Neil. So I think firstly to point out that debt counseling fees are regulated again. I touched on it earlier around the fact that it's a fantastic piece of legislation, and not only is the process clearly defined, but the fees are regulated by the National Credit Regulator. In terms of the fees, it typically works on your affordability. So there is nobody who can typically be excluded from the process. The beauty around the fees and how the payments are made is that there is no additional fees that are paid over and above your monthly installment. The repayment plan, which is calculated by the debt counselor, already caters for your fees, and it essentially forms part of that monthly obligation which you already have. So just to clarify that, there is no additional fees which you as a customer would have to pay, as when your repayment plan is calculated for you, it is already factored in there, and you are more than comfortable to ensure that your monthly repayments and your fees are then catered for through this affordable repayment plan that goes through to all your credit providers.
Thank you, Pascal. So I also think that this is very relevant because of the fact that some people are under the impression that because of the fact that they are already financially distressed, by going under debt review, it's going to be worse on their finances because of the fact that they now have to take out cash to pay for the services, for instance, for Debt Rescue or any other debt counseling company out there. But what we're saying now is that that's not the case. You're not going to dish out any additional money that you have to pay towards credit providers or towards your debt counselor, because that is worked into your repayment plan. So from the first day onwards, you will immediately experience the relief, and you would not have to pay the extra money, because I think the legislator took that into account when they wrote this piece of legislation, that the fact that people would not be in a position to have extra cash to get this help. Because in the past, and that was before the introduction of debt counseling, if we just talked about the remedies that were available back then to people, you might feel that, especially when credit providers started collecting on these people and they weren't able to afford it, these people were not in a position to go to, for instance, an attorney for help. Because if you go to an attorney for help, you have to pay a deposit, and you obviously you have to make sure that they are putting fees for the time that they're working on your case. And if you don't have any money, that's impossible. And I think that's the beauty of this legislation and this process, is the fact that provision is made for the payment of all the fees, and that's worked into your repayment plan. So that's actually very good news. So one of the other questions that we regularly get is, what if both my spouse and I have lost our jobs? Is there help for me? Let's talk about debt counseling first. So with regards to debt counseling, you would not be able to apply for debt counseling if you don't have any income at all, yourself and your spouse. But there is help out there. And the help comes in the form of voluntary sequestration. So Annalene alluded to voluntary sequestration earlier on, but just to recap, so what it comes down to is it's a process in terms of which basically all your debt is written off. But what is important to remember is that there must be an advantage to your credit providers. That's a requirement for the process. So what happens is that when you have a home and you get sequestrated, then that home will then be sold, and the proceeds of that house will then be used to the advantage of the credit providers. If you do not have a house, there's still other options available, like loose assets that can be sold for these purposes. And also you can have a cash sequestration where you pay cash on a monthly basis and you can still be sequestrated. Yes, you would not have the cash at that stage to do that, but perhaps a family member or a friend can help in that regard. So then, Pascal, we have all seen that some of the banks have given payment holidays to consumers. How does these payment holidays work, and is this a guarantee that the banks will look after me until I'm back on my feet? So what I'm asking basically is that the banks really looked good when they offered all these payment holidays. Are they really there to help us, and are they really there to save the day?
Neil, it's a very interesting one. I think, firstly, COVID, nobody could have predicted what has happened here. The government has come to the party as far as some solutions are concerned, and through the Banking Association of South Africa, the banks have also come to the party, to your point, around, assisting their consumers. Whilst it's a solution, it's more a question of, is it a sustainable solution, and what are the different mechanisms or criteria used? So it's important to understand that each bank has got their own criteria that they've actually applied in terms of assisting these customers. I think one, namely, being customers who are in good standing. And when we talk about customers in good standing, it's customers who were actually not behind in the installments on terms of their loans. And immediately the question in my mind is, so what about the customers who were not in good standing? It's almost like they were just left out in the cold as far as that's concerned. But secondly, the main question is, how sustainable is it? The payment relief holidays sort of started in around April and typically should have come to an end towards the month of June. I'm fully aware that in certain circumstances, and based on a case-by-case basis, banks are willing to look for additional assistance towards their customers, giving additional relief, which is essentially what they are supplying you is extending your term and then also giving you the opportunity to breathe. However, with that said, it's important to understand that there are still fees that will be incurred during this time. The interest rates are not necessarily changed. It is essentially them just giving you an interim solution. So to get back to your point around, will the banks typically save you? It's a question of how long is a piece of string? At what point will we get to, as a bank who you've alluded to earlier, also have shareholders and ultimately are running a business? It's a question of, at what point do the banks then understand or decide that they have to now collect on these customers who still owe them funds or outstanding money? So is it a sustainable solution? I certainly do not think it is sustainable. And when people get back on their feet, the question is, when will they get back on their feet? It's almost an element of, it's the unknown at this point. So it's certainly not, a Robin Hood story where you will be saved in the long run. It has been an interim solution. It's exactly what it is. But ultimately, the banks will have to collect on these customers who owe them money. So it's a rather difficult one. And I can't necessarily see it ending out that well for all people during these times, despite the relief that they got from the banks.
Thanks, Pascal, and that's good to hear. But I think it's also important to look at debt counselling and the role of a debt counsellor. So the role of a debt counsellor is that of an independent functionary of court, acting in the best interest of the consumer and the credit providers. So the beauty of this is that what we will typically then do is try to get a sustainable solution, like you said, and that is, especially during these times, what is good about debt counseling is the fact that everybody has suffered. The banks have suffered. They've lost a lot of money. Credit or consumers have suffered. Everybody have suffered. So that's why it's important to then get to a solution that's beneficial to everybody in the first place, and also that it's sustainable. And the only way of doing that is to get an holistic solution. To look at, and the only way to do that is to, when you deal with a consumer, is to look at each and every credit provider of that consumer, and to make sure that the solution that we get is going to be sustainable and that it works for everybody. So, Annelien, talking about the banks and then collecting their money, so is debt collection allowed during lockdown?
So, Neil, yes, it was. It hasn't stopped. But the reality is with especially the higher levels of the lockdowns level 5 and 4, the courts were open, but they were open for very specific cases. So during this period, for example, you would not have had cases heard relating to, collecting on judgment debts and the likes. That was definitely not considered priority for obvious reasons. We were trying to keep people out of the courts and out of crowded spaces and the likes. But so the enforcement through legal action was difficult during this time because of the courts not hearing these matters. But also people's salaries were negatively affected through pay cuts, no work, no pay scenarios and the likes. So it was better for the banks to take more of a wait and see approach for a period of time and just see what was going to happen. And, along with obviously the payment holidays that were granted, where there was merit and they were able to do so. But what we are now seeing is definitely more of these matters. The collectors are starting to contact clients again, and obviously with a gradual relaxation of the lockdown regulations, that more urgent matters are being pushed, are going to be heard, and the collectors are also obviously starting to contact clients again, and where there is no substantiating grounds for for example having a pay cut or whatever applicable to a consumer, that they are going through with the enforcement of collections. So it might not have been a scenario of having the court orders granted for judgments, but the collections are definitely, they've carried on and they are definitely starting to pick up. We can see that happening now.
Thanks, Annelien, and you spoke about the debt collectors also operating now, and we never really think about it, but those are people with jobs and their own income, debt collectors for industry. And it just goes to show that everybody was affected by this pandemic, even the debt collectors, because debt collectors were essentially out of a job during lockdown because they couldn't operate as usual. But obviously they're going to get back to collecting now, and I think it's a good thing because everything is now normalizing, and I think it's important for us to realize that we have to get back to normality, and normality includes that if you owe somebody money and if you don't pay them, they're going to get collectors to collect on that money. But on the other hand, again, there is help out there so that you can act when that happens. But the bottom line is the waiting is now over. I think that's the important thing to realize here, is that the waiting is now over. We've for some reason, everybody were just in limbo during this COVID-19 pandemic and played the wait and see game. And that includes everybody, credit providers, debt collectors, consumers, debt counselors, everybody. Everybody was just waiting to see what's going to happen. But I think we're getting closer to reality, and I think that's actually a relief for most people out there, because this time that we had to spend with the uncertainty in lockdown wasn't good for anybody. So then one of the questions that we always also get during this time, and this is quite an interesting one, is that there are a lot of quick fix money-making schemes that I hear of. Should I go for this, and how do I know whether it's a scam or not? And I'm laughing now because I've seen a couple of these things now coming up, and I've seen specific schemes like this in the newspaper quite recently. I've been contacted myself by people recently about these money-making schemes, and the reality is that the old adage that if it's too good to be true, or sounds too good to be true, it probably is. I think that reigns true because if you don't work for your money and you everybody can just partake in this scheme where you put in a small amount and you have to get a couple of or source people to also join this, and all of a sudden you're going to make a lot of money. I think I've learned through experience that this doesn't always work. But in reality, what's happening here is that these are desperate times. Let's face it, these are really desperate times, and there's desperate people out there. Most of the people that we know are desperate during these times. And unfortunately, you will get people who would use this opportunity to exploit those desperate people. And that's where we see all these schemes. So what the rule of thumb that I use is that, especially when people ask me about specific schemes, whether I think that it's a scam or not, I just use the rule of thumb that if it requires you to pay a fee to join, and you have to source other people to pay, then usually it turns out to be a pyramid scheme, and then it's a scam at the end of the day. The important thing to know during these times is not to gamble with your money. It's not the time to do it now. So then, Pascal, Africa is very unique, and something that is very unique to Africa is stokvel. So stokvels, is it a good idea during this time of the pandemic, and does it have a future in South Africa at all?
Neil, stokvels are a very, very interesting one. Maybe let me just explain my understanding of a stokvel, just so that we're all on the same page. I think it is deep in tradition, firstly, where it possibly originated from. And in essence, it's a pooled savings scheme whereby members opt to join in and contribute a set amount on a monthly basis. There's typically a predetermined rotation, which would then allow every individual to receive a set amount once within a certain period of time, if I may put it that way. So essentially, that's typically what a stokvel is and how it works. The problem with a stokvel, in my opinion, during these times is if there are 4 of us and 2 of us now suddenly have had our salaries have been impacted, as has happened to a number of people during COVID, and we're no longer in a position to contribute towards this stokvel. Depending on where in the cycle, the stokvel is, person A, who should have received funds typically pre-COVID, they might have received 1,000 Rand if it was 100 Rand and there were 10 people in it. However, as COVID set in and you now end up being post-COVID, what could happen is that during these times, certain members did not make a contribution. So your payout that you receive now would not necessarily be 1,000. If 4 didn't pay, it might only be 600. So it certainly does come with, it's a risky savings tool. And I think for me personally, it does resonate to a degree because there's different types of stokvels. Some people have a savings stokvel. Typically in certain cultures, you'll find there's a stokvel where the guys take the money and it's for groceries. But There's also some people who, from a stokvel perspective, have it for funerals. So it can be applied in very different ways. However, from my perspective, it's important to educate people and for people to understand savings, and how to save, where to save. The fact that if you save your money somewhere, it could be an interest-bearing account where you could actually be slightly more secured. COVID has taught us that nothing's secure anymore. I think we have learned from that. But yeah, I think stokvels do come with its own risks. It is somewhat unregulated. And then again, for me, it's important that we just educate people around how to save and where to save. So where stokvel ends up in the future in our country, not too sure. It has been around for decades, and I'm sure it will continue to do so. But I think as people become more educated around different saving mechanisms, it will be interesting to see how and where, if it still has a place in South Africa moving forward.
Pascal, I think you touched on a very important point there, and that is financial literacy and financial education, and the lack thereof in South Africa. And I think that's probably one of the biggest reasons why a lot of us are in these difficult financial situations that we find ourselves in, is because of the lack of financial literacy and then education in South Africa. And I think that government should perhaps do something about this and introduce that at a earlier stage during people's lives and children's lives, because I feel that people should undergo a financial education on school level, so that when they finish school and they start working, or then when they finish their tertiary education, that they know what they're going to encounter. Because what usually happens is that without the financial literacy, people go out into the working market, they start earning money, and immediately they're approached by credit providers offering them credit cards and loans. And these people, a lot of the times, think that these big institutions are willing to give me money. They must have done their homework, so I probably can afford this loan. And that's why they take it up. But with proper financial literacy, you would know that you have to still do your own homework. Now, before we move on, I think let's just discuss the poll that's been running up until now. And you won't believe me, but the poll is currently standing at 85% of everybody in this webinar has been negatively affected by COVID-19 or the lockdown. Now, the irony about this is, although it's extremely worrying and sad, is it speaks to the survey that we ran that was also 85%. Now, this just tells us how about the seriousness of this whole situation and how many people are affected by this COVID-19 pandemic, and how important it is for people to know that it is help out there, but they shouldn't wait too long before they go and access that help. The help is there, just make use of it, because these are difficult times. And what's also important is to make sure that you don't overspend during this time. Even with, I know that with the interest rates that's at a very low level, there's a lot of people asking me, but should I go out and buy a house now? It depends. Would you be able to afford it if the interest rates go back to what it was before COVID, because it's going to happen? People are really suffering during this time, and there's a lot of people who suffer during this time. Not everybody talks about it, and sometimes people feel that they are alone during this time, and they're the only people who are suffering. I mean, yeah, it's confirmed. 85% of everybody on this webinar has been financially affected in a negative way by COVID, and even in our survey, it showed that 85% of people were affected. So it's really worrying, but in a sense, it's good to know that you are not alone. Let's just go to the questions asked by the public, and I've seen one here. Yes, so Pascal, if you can perhaps just answer this one. So how do you know, if you consider debt counseling, how do you know which debt counseling company to approach?
Yeah, I think, Neil, it's important to do your research. It's like, typically for myself, I don't just buy any product. I do thorough research. I look at, is it a reputable company? You know, do they have a legitimate website? You ask friends and colleagues also, but importantly, it's important to understand that the companies that you are typically also, you find fly by nights. You need to go and look at how long has this company been around, what is their track record. You also need to then feel free to chat to credit providers around how do they engage with these companies, yes or no. But it's critically important that you don't just sign up or proceed with any debt counselor who might not be there tomorrow, as opposed to some who are entrenched, have the right people, have the right skilled people at least, have the right processes in place. And importantly, there's the companies who have been around and are entrenched and have good relationships with credit providers as well, is my opinion, the companies that you should be seeking to partner with or to look after your finances, for lack of a better word.
Thanks, Pascal. So I think you also made a very good point there in saying that it might be a good idea to talk to your credit providers, because essentially those are the people that debt counselors work with. So they are obviously in a brilliant position to tell you who the good and reputable debt counselors are out there. So then the next question, Annelien, if you want to take this one, how long does it take to obtain a debt rescue plan via court? What is the timing of it?
So Neil, as we've said before, debt counselling is very well regulated and legislated. So there's a lot of rules we have to adhere to. And one of them includes the set down, in other words, obtaining the court dates. Now that is the protection that the consumer gets, that the credit provider cannot take legal action as long as the consumer is paying in line with the proposal that has been put forward to them based on what the consumer can afford. Now, that is 60 business days. So as long as the consumer is adhering to the proposal that's being made to credit providers, we have 60 business days within which we need to obtain your court date, not your court order. The court order is obviously dependent on what's happening in specific courts. Different courts have different rules. For example, some of them might only hear debt review orders on certain dates. Some of them are a lot busier than others are. So, depending on their location and, what the infrastructure looks like, a court order could take anything from, say, about 4 months and quite a few of them a bit longer, just purely based on the, the specifics in a specific court. So the important thing to know is the set down, making sure that the date is obtained. When the date is obviously dependent on the court, but the court date needs to be obtained within 60 business days.
Thanks, Annelien. And I think what is also important to know is that from the day that you've applied for debt review and your application has been accepted, which takes about 2 to 3 days, you immediately have the protection of the Credit Act, the National Credit Act, on your side. You do not have to wait for a court order or a court application. You will, during all relevant times, have the protection of the Act on your side. So then we've got a next question here. Pascal, if you can take this one. Have you seen any successful implementation of credit life insurance clauses in credit agreements over this time? This is from Melissa. If you can answer that one for us.
Yes, I think, Melissa, so to answer your question, it is yes. I think what's important to understand also that there are different financial institutions and there are different rules with these insurance companies, if I may put it that way. So important to understand that if there is credit life and what those conditions were, who it was with, the NCR has also, if you check on their website, they give a good few guidelines around who to chat to, how to go about your business if there is credit life. But it all also depends on who the companies are and what their approaches are. So there's definitely not a one size fits all approach to my understanding. But yeah, I think just do your research again as a consumer, know where you have, where you don't have, and check the different websites out to see if what can be done. But it depends on who those credit providers and institutions are.
Thanks, Pascal. And then Lyndon asked, so the contract will not be terminated for a period and then give another credit agreement, extend the term then. And I think, Annalene, Lyndon might be referring to payment holidays. Does it mean that if you get a payment holiday, is the contract terminated, your credit agreement, is it terminated and then you provided a new contract, or does it just extend the term? And I think what is important there, and it's a very good question, Lyndon, is that if the contract had to be terminated and you would have been given a new credit agreement, the terms of that second agreement might be different to what you agreed to. Or even if they want you to agree to it during these times, because you are desperate, you might agree to things now that you would have never agreed to under normal circumstances. So, Annalene, you can answer that one, but I think it's important to note there that it's an extension of the term rather than a new contract.
No, absolutely, Neil. So no, it'll just be an extension, and obviously when they are doing the assessment and they give you the feedback, they'll advise you that the term has now been extended. So in other words, they'll add whatever period payment holiday you're requesting. So say, for example, you're only being affected for 2 months, and your employer says, look, you're getting a salary cut or a no work, no pay scenario for 2 months. It doesn't also necessarily mean you're going to just have a 2 months extension at the end of your term. We've got to remember that any non-payment or short payment has implications of interest on the total outstanding balance. So what then happens is you might ask for a 2-month, payment break where you don't pay, but the interest continues to be, continues to accrue in the background. And that 2-month holiday you'd ask for could potentially, depending on the outstanding balance, extend your term by not 2, but maybe 4 or 5 months if it's, for example, a home loan. So it's important to understand that. But no, it'll be an extension. It will not be it will not be a new loan or a new agreement.
Brilliant. Thanks, Annalene. And then Ruan asked, will I have to engage in a consultation in person at Debt Rescue's offices? So, Ruan, no, that's not necessary. In fact, probably about 95% of all our customers and clients engage with us via email and telephone, and these people choose not to come in because of the fact that we work on a national basis, firstly, and secondly, people just don't have time to do this. People are at work, and it's sometimes then easier to just liaise via email or telephone. So no, you don't have to come in at all. And I think we've learned through this whole COVID experience that you do not have to go to anybody and see anybody in person with all the technology that we have available to us. Zoom was introduced to a lot of people, I think, during COVID, and that's also definitely something that we can use with Debt Rescue. So you can liaise via Zoom or just by email or telephone. That's more than enough. And then some more questions. There's another one. Pascal, to add to your debt consolidation that you answered earlier on, does consolidation of debts have to have an insurance cover? That's Jabile.
So Jabile, good question. I think, again, understand who the credit provider is. In any credit agreement, and a consolidation loan would typically be a new credit agreement. There are T's and C's. So as a consumer, you can clearly ask whoever that may be, is there credit insurance cover in the product that you are offering me, yes or no? If there is, understand what are the costs associated, what all does it cover, etc. But it might differ depending on which institution you are approaching for that consolidation loan. But it's very important to, again, do your research, ask the right questions, and let them explain to you what is given in that loan that they are advancing you, essentially.
Thanks, Pascal. And Annelien, if you can answer Deepak's question, and that is there a minimum and maximum limit to apply for debt counselling?
No, there's no limits on either side. With the fact that, as you've explained, that our legislation is so unique in the fact that our home loans form part of it, that already tells us that there's no maximum limit, because obviously, bonds or mortgage agreements have got quite high limits, or high applicability depending on the value of your home. And then on the lower side, I mean, you've got to obviously just make sure that it's completely sustainable. But no limits whatsoever applied.
Okay, brilliant. And Annelien, just to add to this, Mukhari asked, with debt review, what is the exit process after one has completed paying off the debt, and how long does the process take from final payment to the clearing of the name of the client with the credit bureau?
So once the person has made the final payment, the process involves just making sure that we've got all the paid up letters from the credit providers. That is a requirement, is that we have proof that there is no outstanding debt, remaining. And once we have those, we issue what we call a Form 19 or a clearance certificate that needs to be certified by a commissioner, and then as a true copy. And then once we have that, we supply that to all the credit bureaus, and we update the consumer status on the NCR's website as well, and we forward that through to all the credit bureaus. So that could typically take a few days. It just depends, obviously, on how quickly the credit bureaus are able to process that. But yeah, as soon as we have all those paid up letters, we issue the clearance certificate, and we advise all the relevant parties accordingly.
Thank you, Annelien. And then Lefa has an interesting question. Pascal, this is perhaps your expertise. So do you know and can comment about retrenchment policies that cover payments during such desperate times that we are facing? So that's the credit life insurance that Lefa is referring to, and specifically with regards to retrenchment.
Yes, so I think Lefa, again, have a look through, for example, if you had taken a loan with credit provider A, and if they did issue you with any credit life policies. If you are not too sure, contact your credit provider, ask them for a copy of that credit agreement, and if there is credit life, yes or no. Typically in the agreement, it will stipulate what type of cover will be paid out in the event of a claim. So as an example, you're asking about retrenchment. It could be a disability. It all depends on what you signed for at the time of taking out that loan, and when the credit life or insurance was issued to you. So I would again contact your credit provider in this instance, or whoever the underwriters were who provided the insurance. Have a look through that and see what all it covers as far as your retrenchment question is concerned.
Thank you, Pascal. And then Lyndon has got another question. Which one is the best one, administration or debt review? Now, Lyndon, with all these debt remedies, each one has got its place. But it's actually a very good question, because these two remedies do overlap at sometimes, because for some people you can choose whether you want to go under administration or debt review. Administration is a very, very old process, and it's been in South African law for years already. But the problem with that is that it's got a lot of limitations. Firstly, in terms of qualifying for administration, it doesn't cover debt of over 50,000 Rand. So is if the sum of your debt is more than 50,000 rand, you would not qualify for administration. You would have to go for debt review. That is the first thing. And the second thing is that we've had a lot of experience with people that complain about being under the administration because they feel that they are paying off for the rest of their lives. There's just no end to this. So that's not entirely true. Obviously, there's a plan worked out like with debt review, but the reality is that it is an older process. It's got limited application, and the beauty of debt review is that it caters for people with a very low income as well as people with a massive income on a monthly basis. It covers everything, and it's kind of yes, it's a newer process, but it's more relevant to the times that we're going through today than administration, in my opinion. And in my opinion as well, it gives you more protection, and it also gives you a little bit more freedom, because you can sit down and talk to your debt counselor, whether it's via telephone or email, convey your actual circumstances and work out a proper plan that's going to be in your best interest and also in your credit provider's best interest. So once again, it's going to be an holistic solution and something that you can exit at any time that you wish to do. Then let's just look at some other questions here. We've got one from Sandra. When under debt review, can creditors terminate accounts during lockdown for non-payment due to loss of income? And I think that's very relevant. It's a very good question, Sandra. Annelien, can you take that one for us?
Okay, Neil, so what we did see during the lockdown period is that credit providers for consumers under debt review took a step back and gave them opportunity to, give feedback on what their circumstances are if they aren't able to pay. The regulator also intervened there and then requested that all parties to the debt review, factor in what is currently happening because of COVID and the lockdown situation. So the advice there is a very basic one. Communicate your situation to your debt counselor. Make sure that you provide your debt counselor with substantiating documents. So, for example, if your employer has, issued a document to you to say that you're going to be getting a lower percentage or no work, no work, no pay, that you communicate that through to your debt counselor as quickly as possible so that your debt counselor can liaise with your credit providers and advise them accordingly. We have seen very good feedback from the credit providers generally, as long as it's substantiated and, you've got that documentary proof and, are able to establish which period is affected. They have been very lenient and they have said that they will grant, the equivalent of a payment holiday, a grace period during this time. And then obviously, keeping up to date with them and staying in touch with the credit providers. So communication here is key. It really is key, and substantiating it. So obviously you want to make sure that you pass on anything that you have, any documentation from your employer, or obviously your bank statements and payslips as proof that you are being affected. The credit providers have come to the table here and been very assisting.
Thank you, Annelien. And then just one more question there from Jabile, and I think we should end the questions then. Can you seed your life policy then to take another insurance policy, credit life? So if I understand Jabile correctly, what he's asking is, with regards to covering your debt, can you use your own life policy to cover that as well? Or do you have to take out another policy, a credit life insurance policy? Pascal?
Yeah, I think, Jabile, again, it's important to understand if you already have an existing loan, check the T's and C's and see what you were actually sold and signed for. If you are taking out a new loan, which might be what you're alluding to in this instance here, you can and again engage with your credit provider. There is legislation now as well that talks to credit life, how much can be charged. It is also much more regulated now. I know back in the days when I worked in home loans, as an example, you could cede your policy depending if it was a condition of the bond. But again, it is important to understand if you are intending on taking out a new loan and they are saying to you that yes, credit life, and they're trying to sell it to you, ask the right questions. Ask your credit provider in this instance, can I or can't I? It's better to communicate and ask. There's no silly question, as we say, as opposed to signing for something that you're not necessarily comfortable with.
Thank you, Pascal. And that was it, I think, for the questions for now that we've received. So we've run out of time, but there's still a couple of questions that I would like us to discuss. So I think we're going to carry on. So Annelien, just another question that we usually get is that it is always good to communicate with your credit providers, but will this be enough to help me when I'm over indebted? And why is debt counseling important in this regard?
So definitely, it's always good to communicate. If you take the ostrich approach of sticking your head in the sand, your problems don't go away. But the reality is, if you become over indebted and you have to deal with a creditor, each of your creditors individually, it becomes incredibly difficult putting yourself in a position where you are able to keep everybody happy, because needless to say, everybody's going to want the most that they possibly could get from you, in the circumstances. And they're not necessarily going to go and say, okay, but I realize you have 7 other accounts and you need to be fair and give something to them as well. Each of them is going to want the biggest piece of the pie that they possibly could get. And there's nothing binding on them. If you come to an agreement with them, there's nothing that binds them that says, okay, well, we've come to an agreement and I now accept X. And next month, they might turn around and say, okay, but I now want a bit more. Debt counseling is a holistic solution. It looks at all of your debts, every single account that you have. It does an even and fair distribution amongst all of your credit providers, so that there's no preference given to one above the other. And also, at the end of the day, the fact that it becomes a court order. So in other words, it becomes legally binding on all parties. So that you get that legal protection. They can't come back and say, a couple of months down the line, say, okay, but I'm not happy with this anymore and I want a little bit more, etc. It's very, very difficult for an individual to come to a binding, holistic, total solution outside of debt counseling.
Thank you, Annelien. And one question that we get on a very regular basis is that when you apply for debt review, does your employer have to know about this? And the answer is no. Your employer doesn't have to know that you have applied for debt review or that you are under debt review. It should also not have any impact on future job applications where you are under debt review. Your future employer's decision should not be dependent on whether you are under debt review or not. If you do disclose that to your employer, if you want to, or to perhaps a future employer, if you go for an interview, for instance, the good thing about debt review is that, or you being under debt review or have taken up debt review in the past, is that it shows that you have done the responsible thing under the circumstances. You were over indebted and you did the responsible thing and the right thing by going under debt review, paying back your debt in an affordable manner and responsible manner, but just getting the protection that's afforded to you by legislation of South Africa. So I think people can really rest assured that your employer doesn't have to know that you're under debt review, but if anything, it's just going to show that you are a responsible person. Then something that's also very important is prescription. Now, Annelien, what exactly is prescription and how does it work?
So prescription of debt very simply means that the debt has expired, meaning that it cannot be collected on. However, it's very important to understand that when debt actually does prescribe. So if a person owes a debt and the creditor has not proceeded with legal action and the person has not made any payment towards that debt to acknowledge that debt then becomes prescribed after a set regulated period of time. So if the person then does acknowledge the debt, or at any period, the debt then it becomes interrupted. The prescription period becomes interrupted. So the important thing here is legal action. So, well, legal action or acknowledging that you owe this debt. If for a period, like I said, depending on the type of debt, there's nothing that happens, the debt then expired and it prescribes, and it means that legal action cannot proceed to collect on this debt anymore. So what then happens is, if you believe that your debt has prescribed, you then have to advise the credit provider, and he has to either prove that it hasn't, or he has to write that debt off. Collection of prescribed debt is illegal, and the different types of debt that have different prescribed periods. So contractual debt prescribes after 3 years, and mortgage or tax debt takes 30 years before it prescribes.
Thank you very much, Anneline. And guys, we've got so many more questions that we would like to discuss with you and to answer, but our time has run out, unfortunately. But this has been a real pleasure for me, and I'm sure Anneline and Pascal, for you too, to do this webinar. And we just want to thank everybody who attended this webinar, and I really hope that you enjoyed it and that you really took something out of it. And good luck with the future, and good luck with the rest of this lockdown and this whole pandemic, and stay positive. You know, there is help out there in the first place, and secondly, we have to go through this time. We can choose to be negative, or we can choose to be positive. I know it's extremely difficult to be positive under these circumstances, but we might as well, because we have to go through it. And then also a special thanks to Mail and Guardian, and especially Juan, for all your help in making this possible for us. So if you want to contact Debt Rescue, you can do that by going to our website. Our website is www.debtrescue.co.za, or our telephone number is 086 112 3644. Just repeating that, website is www.debtrescue.co.za, and our telephone number is 086 112 3644. Thank you very much, everybody, and go well.